Hello and welcome to Ellum Reads. I'm a researcher who loves to break down fascinating books for you. Today, we're unpacking the story of Bitcoin. We're talking about a technology that started out as this kind of wild cypherpunk dream for peer-to-peer cash and has somehow morphed into a global asset that you see on Wall Street, complete with ETFs and everything. So let's get right into it.
Okay, so to really get Bitcoin, you have to start with the massive mystery right at its heart. The creator is literally a ghost in the machine, a figure who kicked off a revolution and then just vanished.
And this is it, the billion-dollar question in crypto. Who is Satoshi Nakamoto? The name, well, it's a pseudonym. It could be one person, it could be a whole group of people. We just don't know. They wrote the paper, built the first version of the software, and then just, poof, gone. It's one of the greatest modern mysteries out there.
Now, just look at this timeline for a second. It's kind of crazy. Satoshi was only publicly active for a little over 2 years. In that tiny window, they dropped the founding document, launched the entire network, helped guide it in the early days, and then just handed the keys over and disappeared. They literally said they'd moved on to other things. Wild. So, of course, the hunt for Satoshi has been absolutely relentless. A few names always pop up. You've got Dorian Nakamoto, who was famously and, it seems, incorrectly outed by Newsweek. There's Craig Wright, who keeps claiming he's the guy, but the courts aren't buying it. And then there's Nick Szabo, a really smart guy whose earlier work is spookily similar to Bitcoin, but he's always denied it. To this day, nobody knows for sure, and that's probably exactly how Satoshi wanted it. So what did this mysterious creator actually build? I mean, how does Bitcoin even work without a bank or a government calling the shots? Well, the magic is in a few really clever pieces of technology working together. And this quote right here from the original white paper, it just cuts right to the chase. The whole vision was to create a way to send money online directly from me to you, with no middleman, no bank, no one taking a cut or giving permission. The goal was to make digital money work just like physical cash. So the first piece of this puzzle is the blockchain. The easiest way to think about it is like a global digital receipt book, one that everyone can see. Every 10 minutes or so, a new page or block of transactions gets added. And here's the key. Each new page is cryptographically chained to the last one, making it a permanent, unchangeable record. You can't just go back and erase something. The second piece is the peer-to-peer network. So instead of a bank's central computer holding that receipt book, there are thousands of computers, we call them nodes, all over the world that have their own copy. This is what makes it decentralized. There's no single server to shut down, no single point of failure. And the third and maybe most ingenious part is something called proof of work. You might be wondering, how do all these thousands of computers agree on what the true version of the receipt book is? Well, they compete. Miners use tons of computing power to solve a really hard math problem. The first one to solve it gets to add the next page to the book, and as a reward, they get some brand new Bitcoin. It's basically like a vote, where your voting power is your computing power. Okay, so let's walk through it. You send a transaction, and it gets broadcast to the whole network. Miners grab a bunch of these transactions and put them into a new block. Then they all start racing to solve that math puzzle. The winner shouts, "I got it," and broadcasts their completed block. All the other computers check their work, make sure it's all legit, and if it is, they add it to their copy of the chain and start working on the next block. This whole dance happens about every 10 minutes, 24/7. But, and this is a big but, this really elegant design is not perfect. It comes with some massive, fundamental trade-offs. You see, to get that incredible security and decentralization, Bitcoin has to give something up. And that something is speed and scale. This isn't a bug, it's a feature, a core design choice.
And this choice leads to one of the biggest debates in this space. What is Bitcoin for? Is it supposed to be digital gold, something super scarce that you save and hold on to for a long time? Or is it supposed to be digital cash, something you use to, buy coffee? The way it's designed makes it really, really good at being digital gold, but not so great for buying that coffee.
And yeah, this chart just lays the problem bare, because those blocks of transactions are only created every 10 minutes, and they have a size limit. The whole network can only handle about 7 transactions a second. 7! Compare that to Visa, which can handle thousands. It's not even in the same league. So for global payments, the base layer just isn't built for it. So how do you fix that? Well, one of the cleverest ideas is the Lightning Network. It's what's called a layer 2 solution, built on top of Bitcoin. The best analogy is opening a bar tab. You and the bar open a channel. You can buy a bunch of drinks all night. Those are instant, tiny transactions. And then at the end of the night, you just settle the final total. Only that final settlement goes on the main blockchain. It's a way to get speed and low costs for everyday payments.
All right, let's talk about the other elephant in the room, energy. That proof of work system, the thing that makes Bitcoin so incredibly secure, well, it uses a staggering amount of electricity. We're talking about an energy consumption level that's comparable to entire countries, like Slovakia. It's a huge number.
And this leads to a really fierce debate. On one side, you have critics who, pretty reasonably, point to this huge energy use and say it's an environmental disaster. But on the other side, proponents argue that because miners need the absolute cheapest electricity possible, they're actually incentivized to find wasted or stranded energy, like excess solar and wind power, or gas that would otherwise be flared in the atmosphere. It's a super complex argument with smart people on both sides. Now, here's the crazy part. Despite all these intense debates about speed and energy, Bitcoin has made the leap. It's gone from this obscure internet experiment to a full-blown asset class that major financial institutions on Wall Street are taking very, very seriously. And what's really interesting is how this old economic idea called Gresham's Law helps explain why. The law basically says that people will choose to spend their bad money, the money that loses value, and hoard their good money. So many people see their government currency losing value to inflation, and they see Bitcoin as this scarce asset, so they'd rather spend their dollars and save their Bitcoin.
And today, the ways you can invest have totally exploded. You can, of course, buy the actual Bitcoin yourself and hold the keys, which gives you total control. For more advanced traders, there are futures contracts. And now, the big one. You can just buy a share of a Bitcoin ETF in your regular retirement account, just like you'd buy a stock. It's made it so much easier for regular people to get exposure.
This all feeds into what investors call the virtuous cycle, or the network effect. It goes like this. As more people buy in, demand goes up. And since the supply is fixed, the price goes up. A higher price makes it more profitable for miners to secure the network. A more secure network is more attractive to new investors. And you see how the whole thing can feed on itself and grow.
So what's the verdict here? Understanding Bitcoin is really about understanding its trade-offs. No, it's not a perfect technology. It sacrifices speed for security. It uses a lot of energy to create a system that no one can control. But what Satoshi created was the world's first truly scarce digital object. That's a profound innovation, and it's forcing us all to rethink what money even is. That's why this book and this topic are so important to get your head around, because whether it ultimately succeeds or fails, its story is a mind-bending look at technology, economics, and what we choose to value.
I really hope this breakdown has helped you build a better mental model for what Bitcoin is and why it gets people so fired up. Let me know in the comments if this makes you want to pick up the book. Today, we are tackling a big one, Bitcoin. It's gone from this mysterious paper posted on some obscure mailing list all the way to a financial asset that's traded on Wall Street. So how in the world did that happen? Let's break it down, from its secret creator to those mainstream ETFs. All right, here's our roadmap for today. We're going to start with the incredible creator myth, then dig into what the core invention actually is. After that, we'll look at its biggest hurdle, the scaling problem, before seeing how it transformed into a major financial asset, and finally, how you can actually get exposure to it. First up, we have to start with one of the greatest mysteries in modern technology. Who is Bitcoin's creator, this person known only by the pseudonym Satoshi Nakamoto? This one sentence, right from the Bitcoin white paper, it laid out such a radical new vision for money. A vision of a financial world where you don't need the traditional gatekeepers, like banks. So who is this person? Or maybe it's a whole group. Honestly, we have no idea. After guiding the project for 2 years, Satoshi just vanished. Poof. Gone. But they left behind this incredible digital treasure chest, over 1 million Bitcoin, all mined at the very beginning. It's a fortune that, to this day, has never been touched. Now, what's really fascinating is that people have tried so hard to unmask Satoshi. You've got your usual suspects, right? Dorian Nakamoto was famously misidentified. Craig Wright's claims were just completely torn apart in court. And others, like Nick Szabo, they seem plausible, but nothing's confirmed. This anonymity was probably the whole point, to make sure the creation could stand on its own. So, if we look past the mysterious creator, what did they actually invent?
What was the problem that was so important that it needed this level of secrecy and this wild new solution?
And this really gets to the core of it. Bitcoin solves something called the double spending problem. Think about it for a sec. Sending a digital file is just like making a copy. So how do you send a digital dollar without being able to just copy-paste it and spend it over and over again? Normally, a bank sits in the middle and keeps track. Bitcoin's absolute genius was finding a way to do that with a network of total strangers. And here's how that network pulls it off. Imagine a giant public notebook that everyone in the world can see. Every 10 minutes or so, computers on the network, we call them nodes, are in a race to solve a super difficult math problem. The winner gets to add the next page of transactions to the notebook. And this page is cryptographically sealed to the last one, creating a chain of blocks, a blockchain. It's just a brilliant way to have a secure and unchangeable record without anyone being in charge. That race to solve the puzzle, that's what we call proof of work, and it's really the secret sauce. Because it takes so much real-world energy and computing power to add a new block, it's incredibly difficult for anyone to cheat and try to rewrite history. In this system, the truth is simply the chain that has the most work put into it. It's a totally revolutionary way to create digital trust. And here's another key feature: absolute, undeniable scarcity. There will only ever be 21 million Bitcoin. That's it. This fixed supply is hard-coded right into the protocol, which makes it a provably scarce digital asset, completely different from traditional currencies that can just be printed forever.
But, and there's always a but, this really elegant and secure design comes with a huge trade-off. And that's led to the biggest challenge and debate in Bitcoin's entire history: scalability. The network is incredibly secure, for sure. But is it fast enough to handle the volume of global commerce? For everyday stuff, could you actually go and buy a coffee with it?
The answer, at least on the main network, is nope. The very things that make it so secure, like that 10-minute block time and small block size, they create a massive bottleneck. Just for comparison, a centralized network like Visa can process thousands of transactions every single second. This is the infamous scalability problem.
So the solution the community came up with is actually pretty clever. You scale in layers. The main Bitcoin blockchain, that's layer 1, it acts like the ultimate settlement layer. Think of it like the Fed's system for huge, important transactions that need the absolute maximum security. But for everyday payments, you use a second layer, like the Lightning Network. It allows for instant, nearly free transactions. It's kind of like opening a bar tab that you only settle up once at the end of the night. And this technological evolution, this idea of separating settlement from payments, is what really allowed Bitcoin to mature from this niche little experiment into a globally recognized financial asset.
And wow, as an asset, its performance has just been staggering. I mean, look at this. Over the last 14 years, Bitcoin has had a compound annual growth rate of around 86%. That just blows traditional assets like the S&P 500 and gold right out of the water. It really shows this powerful growing adoption trend.
And even with thousands of other cryptocurrencies popping up left and right, Bitcoin is still the king. It consistently makes up over half of the entire digital asset market cap. That's a huge testament to its powerful network and its role as digital gold.
A lot of people don't even see Bitcoin as a competitor to more complex platforms like Ethereum, which is trying to be a decentralized world computer for all sorts of apps. No, they see it as a completely different animal. Bitcoin is laser-focused on one thing: being a secure, decentralized monetary good. It prioritizes stability and security above everything else.
Okay, so Bitcoin has proven itself as this new kind of asset. But for years, it was really hard to buy. So how did Wall Street finally build a bridge to it? How did they make it accessible for mainstream investors?
Well, for a long time it was tricky. But now, there are basically 3 main paths. You can buy spot Bitcoin directly on an exchange, which gives you full ownership. Or you can trade futures, which are basically contracts that let you bet on the price without holding the actual asset. And now, you can buy a spot ETF, which is like buying a stock that holds the Bitcoin for you. Each one has its own pros and cons, of course.
The approval of spot Bitcoin ETFs in the US back in 2024 was an absolute game changer. I mean, for the first time, anyone with a brokerage account could get direct exposure to Bitcoin's price in a simple, regulated, and really familiar way.
It just completely removed all the technical hurdles that kept so many people on the sidelines.
So after this whole journey, what is Bitcoin? Is it digital gold, a tech stock, or is it something totally new? Here's the verdict. The real takeaway here isn't just about the price. It's about understanding that this represents a fundamental shift in how we can think about money and trust on the internet. It's a complex, still evolving technology for sure, but its story is far from over, and it has already changed the world. So what do you think is next for Bitcoin? I'd love to know what you think. Let me know in the comments below. Thanks for watching.